Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, August 12th at about 2:15 p.m. Eastern. Well, Wall Street's main indexes rose today, setting the S&P 500 and Nasdaq up for a fourth straight week of gains. Isn't that good? The S&P 500 is up 16% from its mid-June low, with the latest boost coming from a slower than expected rise in consumer prices and a surprise drop in producer prices in July. So on that note, we'll take it, and let's go on to three charts that could give us some insight into the week to come. First of all, we always look at a daily chart of the S&P 500 SPDR, symbol SPY. And as you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. As traders, we watch the S&P 500 because traders are top-down players in the market. We look at the S&P 500 and the Nasdaq first, and that helps us determine where our stock may or may not go next. So when I captured this chart today, the SPY was trading at $424.84. This is about $42.48 on the S&P 500 itself. Now the SPY right now is trading about 12% below the SPY's last all-time closing high back here on the 3rd of January. That's right about here. So we're now, instead of being 20% or more below the all-time high in January, now we are only 12% below that all-time high. So that's a real good thing. Certainly a lot more fun on the long side than being down 20% like we were, and more than that down in June, back in June. So after falling, and so we know that from that January high, the market started falling like a stone, falling below the 50-day moving average, the green line, the 20-day moving average, the red line, and then it tried to rally in March but couldn't hold, fell down below the 200-day moving average, the black line, back down below the 20 and 50 days, and fell pretty darn hard here down into May. Tried to rally in May but came up to consolidate here at about 417. Couldn't keep going any higher, certainly couldn't get over that falling 50-day moving average. Then we did the dumpster dive, as I call it, and we went down to the June low at 362. So this is our line in the sand. It has been for some time. Grateful that it hasn't gone below that for the second time, that's for sure. So from this June low at 362, and note how far below the 20-day and 50-day moving average, and certainly the 200-day. Notice that at the extreme fall below these major moving averages. And while you're at it, since we're here, look down. This indicator here is the 14-day RSI, or relative strength indicator. Notice how it went down. These lines here are indicative of a market being oversold or overbought, and it came down to this low midpoint to not totally oversold, but did move down pretty dramatically on the RSI. Then moved up from that 362 low to 371 up here, punctured the 20-day moving average intraday, but couldn't go above it at that time in June. Fell back down and came back down to make the low here at 371. Now, as we said, that's positive because it's a higher low, and that means that buyers are coming in to scoop up in your asset, in this case the SPY. They're coming in to scoop it up before it gets back down to that prior low at 362. So that's a good thing when buyers come in early, I'm going to call it, and don't let price fall back down to the prior low. So that's a nice thing. So at that point in July, then we know the SPY started up marched its way right up through the 20-day, rallied over the 50-day, came back to sit on it for a day, and then said, nope, going higher here. So now we're back up here, as I said, at 424.84. Now, is the downtrend broken? At the moment, yes, the downtrend is broken, and certainly that's a nice thing. What we do have to do is look here at what's above. So what's above here? And above here, of course, is the 200-day moving average. Now we have this little high here. I don't know if I can draw a straight line. That's where we are right now. We're up at price resistance at 424, 425. That's a prior resistance point here, a pivot back here at the end of April. So we're back up to that point, and the question is, can the SPY attract enough buyers to overcome the resistance that it's going to meet if it does continues higher? Be interesting to see. Also, sometimes the 200-day moving average, the black line, this can be a tough dude to get over, especially if it is moving. If it's moving horizontally, not so bad, but if it's moving down many times, the 200-day moving average can be a tough thing to conquer. And right now, that's coming in at $431.82. Just call it 432 to make it easy. So can it get over this? We don't know. I know that many of the commentators on CNBC were more positive today, but of course that comes in with the rally we've seen for the last month and change. So indeed, it does look positive at the moment. I've been in the market too long to think, okay, everything's good now. We're going up from here on out. I've been in it too long. And we trade what we see, not what we think will happen. So now we note, though, that the SPY is trading at quite a premium to, or high above, we can call it, the 20-day and the 50-day moving average, that's for sure. And if we look down here at the RSI, we see that the SPY is getting overbought in the short term. Overbought means, let's just call it many people have bought it, and we don't have many sellers out there. What happens then? Well, markets move in cycles. They do not move straight up and hopefully not straight down. So I'm going to consider, if I get into new long positions right now until I see what the market's going to do next week. Yes, I think it's bullish. Yes, I think it's getting overbought. So I'm going to, when I get into new positions, I'm going to scale in, meaning buy a few shares at a time and then add to the trade if it goes well. All right, so now let's look. Our next chart here, as we always do, it's a chart of the Invesco QQQ, symbol QQQ. This ETF represents the Nasdaq 100. Of course, that's a major index in the market. And as I usually say, top holdings are Apple, Amazon, Microsoft, and Tesla. Now today, excuse me, the Qs, when I captured this chart, are trading at $328.75. It is trading above the 20-day moving average, trading above the 50-day. That's a good thing. Still below the 200-day moving average, just like the SPY. And today, at the price 328.75, the Qs are trading at 18% below the all-time closing high of the Qs. You can't see it on this chart. It was back in November 19th at $403. Now we know that a bear market is 20% below all-time highs, and we know that the Qs fell into that, but it has been healing. At least for now, it's been healing. So today we're only 18%, we'll take it, below the all-time high. Now, the Nasdaq fell like the SPY did since the beginning of the year, came down dramatically, rallied up in March. Everybody did. We said, no, we can do this. Note that 200-day moving average, and note how price said, good grief, I'm trying, but nope, couldn't happen, and price bumped its head several times against the 200-day moving average and then said, can't do it, don't have it. So it came down here, rallied up in May a little bit, up to where am I here? About 312, then fell down, and the June lows here were 276. So 276 is our line in the sand. No, I'm sorry, hold on here. June low was at 269. That's what I wanted to say. June low was at 269 right here, because we need our line in the sand that we do not want to see it go below. So lows at 269, rallied up here to 294, fell back to 276, went back up and back up to where it had been. So it's like, can we do this or not? But the lows kept getting a little higher, and that's a good thing. And finally, the Qs rallied up and over the 20-day, over the 50-day again to where it is now at 328.75. Now, this you can say, our tech stock's back. Is this our new bull market? I think it's a little early to tell yet. I mean, the initial downtrend has been broken, and that's a good thing. Again, I've been trading too long to go, oh yeah, everything's fine right now. I still see inflation. I don't know how they get that it isn't here. If you go to the grocery store, I've been slack-jawed lately. But at any rate, the uptrend here is looking certainly better than not over the 50-day, again at a premium to 50 and 20-day moving averages. Like the SPY, it's getting overbought, at least in the short term. So knowing that, if you plan on getting back into tech stocks, I would ask you to please trade carefully and consider, again, using stops on your positions. Okay, our final chart for today is a chart I don't believe we've looked at before, but I kind of wanted to add it to our say, call it watch list, whatever you want. This is the EDOC, Global X Telemedicine and Digital Health ETF, the EDOC. I should have put ETF there. The EDOC has 39 holdings. The top holdings are JB Health, Masimo, iRhythm Technologies, Agilent Technologies. You probably heard of that. Now, this is a very new ETF, and of course, telemedicine is a pretty new thing too. This opened in July 20th, 2020, so it's a 2-year-old ETF. Its all-time high, of course, you can't see on this chart, was at 23 in February of 2021. Now, with so many stocks and ETFs are really overbought right now in the short term, so I thought that I would look at some industry groups that are not overextended, and this is one of them. And I think that telemedicine probably has a robust future ahead. So I'm not adverse here, as long as it behaves, to getting in a little early. Maybe this is a longer term hold if it continues to do well. So coming into 2022, if you look back here with me on the left side of the chart, coming into 2022, EDOC was trading at around $16, right back here. Then it fell down to its March low. Everything fell to a March low at $12.50. So it fell down here to $12.50, then rallied up past its 20-day, 50-day moving average, rallied to 15, and then fell down here to the May low at $10.74. So it came down here to this low and then made a very shallow double bottom. It moved back up here to 12 and change, came back down, retested that low, but bounced off that low at 1074 again, 1070, and marched up back through its 20-day moving average, its 50-day moving average. And this is a slow ascent, but I'm okay with that right now, because with the market being overbought in the short term, so many stocks are overbought in the short term, I'm not in the mood to get into something at the highs and then take a beating on it next week. So I'm looking at this pattern as something, if it continues the way it's going, that looks pretty good. We had a nice rally the last few days. Now, this does not have high volume, not as yet anyway. This is not anywhere near a day trading stock, but it is something I wanted to, as I said, maybe a little calmer here if things recognize we're overbought and start to pull back. This one is marching up pretty slowly here, so it shouldn't be too bad. So anyway, if in the coming week the market behaves reasonably, and if the EDOC, now it's at 1336 today, if the EDOC can stay above $12.50, which is right here, in the coming week, if it stays moving the way it is, and again above $12.50, I will add a small position to my trading portfolio. I'm going to place a tight stop here at $12, just below the 50-day moving average. Now, if and when the EDOC can rise above the 200-day moving average, which is coming in right now at $14.12, if it can rise above that, at that point I will add more shares to my position. And of course, by then I will be using a trailing stop. Now, I did get a question last week about, Toni, what is your trailing stop? And it really kind of depends on what you have in mind for the particular stock or ETF you're trading. This one, to me, I would consider probably more of a longer term position, because I think people will be motivated to get in it once it gets going. It may not be a wild and woolly winner right off the bat, but however, I think in the longer term, I probably will get a core position. So in the short term, when it's doing this, my stop may be below the 20-day moving average. In the longer term, I may have some shares that I say, as long as they stay above the 50-day moving average, I'm good. Of course, you can always look at price support and go below that a little bit and use that as your stop. There's many ways to put stops in, but price support on a daily chart is totally valid. And you can use the lows of this consolidation, which is what I used for my initial stop at 1250, was the lows of this consolidation. So you can move moving average, you can use price, anything like that you think is valid to make your stop. So, and again, in this market, as I've been telling you, I'm not in any mood to lose a lot of money. I've done well, and I'm not in the mood to give it back. So I'm using a reasonably tight stop on this. So, okay, you guys, that is it. You might want to keep an eye on the EDOC in the coming week. So now, please know that this is a really good time to invest in yourself right now, especially since summer is just coming to an end. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training. That's a really good one. 7 Steps to Successful Trading are also our very popular one, and good right now because you're in and out maybe in a few days. How to swing trade successfully. I love how to trade the trend for profits, and that's something that we can start using right now. Plus 3 winning setups, great for beginners. How to read charts, great for beginners. And right now, perfect time to learn how to bottom fish like a pro. These programs are timeless, they're low priced, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.